started in a few minutes. Let me know where you're watching from.
Trying my best not to lose control. I want you, that's all I know. Trying my best not to lose control, 'cause I adore you, adore you. Trying my best not to lose control. I want you, that's all I know. Trying my best not to lose control, 'cause I adore you. Baby, I adore you. Maybe I adore you. Yeah, I'm feeling higher and higher, I'm up on cloud nine. Baby, I adore you. Trying my best not to lose control. I want you, that's all I know.
All right. What's up, good people? We are live. It's been a while since I've been live, so it's exciting to be back live with you. If you're new around here, welcome to the channel. Stock market coach and option trader Jason Brown. And on this Friday, December 20th, we want to dive into the sell-off that just happened with the Fed announcing the interest rate reduction, not a hike, reduction. And then the market just totally sold off. So you might be thinking like, what the H just happened? Like, I thought that was good news. Technically it was, but we're going to break down why it didn't quite translate after the Fed spoke. So anyway, if you're checking in, let me know where you're watching from. Let me see if I can pull up the comments. We got Deborah checking in. What's up, Deborah Perkins? Veronica from New Jersey. Welcome to the party. My good man, Michael Anthony's in the building. Jonelle from Silver Springs. Marjavis, it's been a minute. Welcome. Ron Collier, welcome to the party. All right, so let's dive straight into the stock chart and let's talk about what happened after the Fed had announced, the interest rate cuts, which it should have been technically good news, but the market just totally tanked after that and what it really means for you and your money. Boom, 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 boom. All right, so right here, we got a chart of the S&P 500 up here. And for those who don't know how to read stock charts, this is just the daily movement of the S&P 500. So if it's a red candlestick, that means the market was down. If it was a green, that means it closed higher than it opened. There's a couple things. Let's dive straight into technical analysis first. Let's take all the other indicators off the chart and let's just stick with the candlestick chart and volume, which is down here at the bottom. Couple things we need to know before we get into what Powell said. From a technical standpoint, before you panic, was this a sell-off or was this a pullback? That is the question that you should be asking yourself. I believe it was a pullback. If you look and we draw some support and resistance lines right here, and if you're brand new to all of this, don't worry. Support is just the place where stocks or the overall market pulls back to and people come in and support it. They buy it up. They want to put money to work. It is a floor where the market or people, traders, investors, whatever you want to identify yourself as, start to say, I like it at this price. So it has support for buyers and people to put money to work in. So this is what we're looking at. I just drew a support line and then I'm going to draw a resistance line. So if you look at the support and resistance lines here, let's really decipher, is this a pullback or is this a trend change in some type of major sell-off? I'm calling it a pullback because you can see the market pulls back. When I talk about the market, the S&P 500, we pull back once. We'll call that number one. We pulled back twice. We pulled back 3 times. We've pulled back 4 times. And here is number 5. We've gotten a pullback to this uptrending, this line right here. Let me change it to be a different color. This line right here, I'm going to make it a different color so it's easier to understand what I'm talking about when I say the blue line or something like that. Oh, here we go. Boom. Let's change that to blue. We'll call that blue line uptrending support. So Technically, from a technical perspective, not bringing fundamentals in into this yet. Technically, what we tell our members inside Power Trade University, we see this pullback to the uptrend and support line. What most people do is panic. What we tell our people to do is like, get ready, get your money ready. This is the time to buy, because we don't want to buy at these all-time high levels. We don't want to buy up here where the numbers are at, because that is where we typically see a sell-off. And so the sell-off, when you're looking at it from a technical perspective, and you say, okay, the chart is telling you, for the most part, you shouldn't have been surprised that we got a sell-off or a pullback from this level back down to here. Second thing the chart is telling you is that we shouldn't be too surprised that we have a bounce. We have a bounce down here at support. I'm going to draw the word bounce. We shouldn't be too surprised that we have a bounce down here. Why? Because it's done it 1, 2, 3, 4. And as of right now, it's doing it for time number 5. And so the bounce just means that people are coming in with their money. They're ready to buy it. They think everything is on sale. And so they're ready to pounce and bounce on the market and buy it back up. We only got like 23 minutes left before the day closes. So unless something drastically changes, the bounce is going to hold for the day. So let's talk about what caused the sell-off in the first place, all right? There are several things that makes the market sell off. There's the technicals, the practicals, and the fundamentals, okay? And so technicals is the chart, meaning what I just walked you through. When it gets up to this level, market gets oversold and it sells off. That's just a technical level that traders look at to say, I think the market's a little overbought. So we had the technicals line up that the market is overbought. The fundamentals of the economy, as of right now, the fundamentals of the economy are pretty sound and sane. So the only other thing that we had to cause a sell-off was the practical. And practicals is things like practical news or something that is like, okay, that just spooked everybody, or everybody wanted to take some profit. So what was that practical news or information that came out? Because technically we got a rate cut, which means people should be paying less in interest, which ideally should lead to a good thing. So why did the market sell off? Well, let's talk about it. The market sold off because of a few key comments from Fed Jerome Powell, okay? So number one, Fed Powell said the Federal Reserve rate cuts is by a quarter point, but envisions, here's the key word right here. Let me give you the key word that threw people off. We envision fewer reductions next year. So the question you have to ask yourself, if you are not a person that is in tune with the stock market, what does fewer rate cuts mean? Well, as of right now, we were scheduled to have 4 interest rate cuts next year. Well, after the press conference, fewer has so far been determined to be maybe 2 rate cuts. And then the market priced in the fact that maybe we go down to 1 rate cut. And so what happens is the market starts to get ahead of itself. The market says, we're going to get 4 rate cuts next year. That's going to stimulate the economy. That's going to be good for business, blah, blah, blah. Let's buy these stocks in advance and be positioned to capitalize on it. Well, then when new news comes out, which is practical information, and the Fed says, what? He says, you know what? Maybe we're going to do fewer cuts than we expected. Everybody who got ahead of it is like, whoa, okay, maybe stocks aren't going to go as high as we thought, because we're not going to get 4 rate cuts. We might get 2, and who knows if we'll even get 2. We might just get 1. And so, boom, you have what's called a knee-jerk reaction. What's the knee-jerk reaction, Jason Brown? The knee-jerk reaction is this day right here. The knee-jerk reaction was whoosh, big stock market sell-off. All right, so we got that knee-jerk reaction. The other thing that Fed Powell said that I thought was very interesting is he said, the December cut, all right? He said the December cut was a close call. And so now you're like, okay, well, what does that mean, Mr. Chairman Powell, right? Because you're trying to listen to his words to get an indication of where you think the market is headed and where you think the economy is headed. And so when he said the December cut was a close call, meaning we almost didn't even give you another interest rate cut here in December. The market starts to ask questions like, well, wait a minute. Why is that? What does he see? Is inflation heating back up? Is the economy not as strong as we thought? And so it can't, like what? Why? Why did he say that? Why did he say that? And what does that mean for the overall economy, that this was a close call? Does he see inflation, which is considered to be sticky, headed back up on the rise? And if they reduce interest rates, that spurs momentum for people using their credit cards and borrowing money and buying more stuff. And if people are buying too much stuff, it kind of keeps inflation high or raises it higher than it needs to be. And so the market is like, what does Fed Powell see? And why would he say that he almost didn't cut in December? And if he almost didn't cut in December, does that mean maybe they won't cut at all next year? And so you mix that comment with, we envision fewer rate cuts next year. You mix that with December was a close call, and the market takes that information and says, you know what? We definitely not getting 4. We might get 2, but we might get 1 or none. And so the market, boom, took everything, sold it off. All right, what does that have to do with you and your money? Well, here's my thought process on this. The world didn't change in one day. Companies didn't all of a sudden sell less products. The demand didn't all of a sudden drop by 100 points because the market sold off like over 100 points. I think the Dow Jones fell over 1,000. Let's bring up the Dow. The Dow Jones Industrial Average fell by like 1,000 points, right? I mean, it fell from 43,400 all the way down to 42,000, right? So Dow fell over 1,000 points in one day. However, before you panic, remember those support and resistance lines I told you about? Well, do you think that it's interesting that the Dow Jones Industrial Average stopped right at support? It sold off to support. We had a doji the next day, and then we had a bounce, where we're having a bounce today as of Friday. Here's the other thing to note about the bounce that we're having. Pay attention to the volume. As much volume that sold, well, no, we have to go back another day. But if you look at Wednesday, and then you look at Thursday, we have already eclipsed, this volume has already eclipsed the selling volume that happened on Wednesday. So the amount of buy-in that has come back in has already eclipsed the amount of selling that happened Wednesday, which is an interesting signal to me that we might be ready for another move back up to this level right here. So we might see some action kind of like this in the Dow Jones Industrial Average as well. So all signs are pointing to stocks have pulled back to a nice support level on the Dow Jones. And then I already walked you through it on the S&P 500. Stocks pulled back to a level where technically this is probably a good time to start looking at buying. So let's look at some of the stocks that we talked about with our members and gave them the option plays. Let's take a look at Amazon. Amazon had a huge pullback, or did it? Because technically it pulled back to what? Pulled right back to the moving average, like it's done there, like it's done there, kind of like it's done there. And so technically, based on the technicality of the chart, it's actually pulled back to a place where I like it. I like it right here. I like it right now, whether that's entering a new position or whether that is adding to our current option trade position that we already talked about. Last time when I was on the Schwab Financial News Network, if you haven't seen that news segment, when I was on Schwab Financial News Network, I talked about Amazon. When it pulled back, he said, what do you think about it? I said, if you've been looking for a discount on Amazon stock, it pulled back, I think 16 points, gave you a 7% discount on the stock. That was this day right here. That was back here. When I talked about that 16-point pullback, 7% discount, what did the stock go to do right after that? It ran from 200 all the way up to 230. I don't think this time is any different. You got a pullback from where? Stock fell from 233 all the way down to 220. Okay, so that's about a $13 point drop. If you do some quick math here, let's do some quick math. If we take, that's not what I wanted to do. Let's do some quick math together. If we take a 13 point drop from, what level was this? 233. All right, so a 13 point drop divided by 233, you have, it looks like about 5.57. Let's just round it up, about a 6% pullback. The last pullback was a 7% pullback. Why is that important? Because nothing happened abnormal, right? Last time we got a 7% pullback. This time it's a 5.5% pullback. So most people might look at that and be like, oh no, I got to panic. I got to get out. But the question you really have to ask yourself is, did something abnormal happen? Or is this in the normal range of how the stock behaves? We typically get a 5 to 7% pullback. When I say typically, at least based on the time frame that we're looking at right here in the chart, we've gotten 5 to 7% pullbacks here, and now here again. So that is nothing to panic about. Does that make sense? If you're watching live, let me know in the comments. Is this making sense? If you're watching the replay, let me know in the comments. If you're watching on LinkedIn, Facebook, YouTube, let me know. Is this making sense? So you have to ask yourself, is it time to panic? Or is this in the range of normal and it's just time to chill out? Is it time to sell your position and run for the hills? Or is it time to enter a new position or add to the one that you already have? These are the questions you should be asking yourself as a trader, as an investor, as a person who's just looking at the market for the first time. You're trying to say, like, when do I determine when to buy and sell? I'm giving you the gold right here. My girl, Jack Quay, Steve says it makes sense. Jack Quay says it makes sense. Irina says yes. DeAndre, Closa, I hope I'm saying that name right. Veronica, Orlando, yes. All right, my people, they're saying yes, it makes sense. Good. That's what this is all about. Does this stuff make sense? Andre says, what'd you say here? We'll just pop it up on the screen right here. Andre says the market needed rebalance. Absolutely. The market needed to rebalance. It doesn't just go straight up in a straight line. All right, let's look at another stock that I talked about on the Schwab Financial News Network, and that's Palantir. We talked about Palantir on the Schwab Financial News Network. Now, for our members, when the stock sold off right here, and we saw this, what's called like a hammer, which is where the stock sold off, but then it's got bought back up. And you can see, let me zoom in on it if you don't understand what the hammer is. The hammer is basically a candlestick pattern that looks like a hammer, right? If you think about a hammer, what does a hammer look like? It looks kind of like that, right? There's like the head, and then there's the handle of the hammer that you hammer stuff with. So that is the hammer. So when we saw the hammer pattern, which is right here, why is that not erasing? I don't know. I don't know why it's not erasing, but there we go. When we saw the hammer right there, I'm like, okay, I think that's the bottom. The bottom is in because we got this pullback right to support, right back to support. And then we lifted up off support, came down, tapped it again. Today, we're getting another lift off support. I am going to be really interested to see. Now, I'm long Palantir. This is one of the trades we shared with the members. I'm long this stock. Here's the thing. I'm going to be super interested to see if and when, it won't happen today. We only got 10 minutes left in the trading day. I want to see if this stock takes out this day right here, because that was the day where it gapped up and people said, you know what, it's overbought, a little bit of too much of a movement. Let me take some profit. However, we've had a pullback since then, and we're kind of rounding out, and we're getting ready to test that roof, that resistance, that level where people thought it was overbought. If we break through there as early as next week, I think it's look out to the upside. Now, if we hit our head and roll back over, this level could be, showing us that it's a problem for this stock to add any more market cap or value past the $81 price point until we get new data, which could be earnings or until we get, new information about how AI is going and how contracts are going in sales for them. But if we break this prior or short-term prior resistance where we sold off, that's going to tell me a couple things. Number one, there's a new appetite for the stock at a higher and higher price. Number two, we're attracting new buyers because the buyers who jumped out right here is not necessarily the same people that were eager to get in and buy it back up, or else these guys would have just waited and just held on to the stock. So it's telling me two things. Number one, there's an appetite for the stock at higher and higher prices if we break through. Number two, we're attracting new buyers, new investors, which both of those are good things. New buyers and a new appetite at higher and higher prices basically is a recipe for an explosion in the stock. Now, that's what I'm going to be watching for. Do we know that that's what we're going to get? I don't know. That's what we're going to be paying attention to. So here's the thing. Before we wrap this up, let me know in the comments, any stocks that you're looking at, any comments or thoughts about the overall market you want me to address while we're live, because we're just hanging out, having fun. I just wanted to kind of share my thoughts on what the sell-off meant, why it happened, and what does it mean for you who are looking to enter the market and potentially take a trade on the overall market or some individual stocks. How should you be looking at this thing? All right, so we got a couple coming in here. New Life wants to look at MSTR. So let's take a look at MSTR. All right, let's take a look at MSTR. Pretty interesting gap up as well. Look at this gap and crap. So we call that a bearish engulfing candlestick. It gapped up and then fully engulfed the previous day bearishly and then sold back off. I like this. I wish it would have just kind of held on this trajectory right here. The fact that it sold off a little bit Wednesday and Thursday, I'm not going to knock it because the entire market sold off Wednesday or Thursday. So we're getting a little bit of a bounce right here on ticker symbol MSTR, which is what, MicroStrategy. So as long as this 50-day moving average holds, you're basically, I look at it like this. If you were looking at this stock right here, pre-breakout, this is post-breakout, but right here, this was the first day of the breakout right here, right? It gapped up and ran. And then the stock went from roughly 320 all the way up to 520. So we had 160 point run. So now we have an example of where the stock could go. However, I don't foresee this stock coming back down here because we were already on this trajectory. We got earnings and then we decided to go higher. So basically, if you missed out on this run, you have a second chance literally to buy this exact same setup if you're interested in this stock. You got literally a chance to get right back in on the run up that you missed. And we know that there was at least some appetite for the stock up to 520. Now, I wouldn't expect it to go all the way back up there. I mean, not short term, but I think you could probably milk this thing from 360 up to 430. You add about 70, that's a 70 point move from where, not 70 point, from about 360 to 430, 70 point move that you could potentially capitalize on. I wouldn't be greedy and go like, I think it's going back to 520. I think if it gets back up to here to 430, you take your profit, you're happy about it, you move on. So that's my thoughts about that. My man Ron says he wants to take a look at Target. Let's take a look at TGT. Target's just been in the doghouse lately. I mean, if you zoom out and look at the overall trend of Target, they just can't seem to get it together. They can't seem to get it together. The overall trend on Target is down. What I'm going to say about Target is if you want to play in the consumer staple space, I like Walmart better. Look at the trend on Walmart. The trend on, you got Walmart, which is what? Up here in what we call the winner circle. And then you got Target, which is what? Down here in the penalty box. So I like Walmart as the better play if I'm going to go bullish Target has earnings coming up. You got a little bit of time before earnings, but it doesn't matter. I mean, they just released earnings right here, which was what, November 20th, and then the stock just, let me see if I can zoom in, make it bigger. Stock just got creamed. I mean, it just, see this right here. Stock just got creamed, gap down, has not been able to find its footing. You compare that to Walmart. Walmart released its earnings right here. Stock has been in an uptrend since. And so with Walmart, I say, if this could pull back to the 50-day moving average, that would be a better entry. A pull back to the 50-day, if it's gonna pull back to the 50-day, which is just, I don't know, about 4 points from where it's at. It's at 91, 92 bucks. We get a pull back to about 88. I like Walmart. I think that's the better stock than Target, So I'll take one more. I'm not going to do Apple. We covered that one inside the university. Let's just do some stuff we've never seen before. Let's try Quantum. All right. So Steve wants to see Quantum, QTUM. We'll wrap this up on Quantum. Quantum is an ETF. All right. I'm not sure what kind of exchange traded fund this is, but love the final breakout that we got here. We got the flush out, overbought, sold off, and now we're getting a bounce right off the 20-day moving average. This one's a little tough, right? Because as this moves higher and higher, it's creating new highs. And so we don't really have we have short term where we think it can go. We think it can go to 90 bucks. It's a $81 stock. So you think it can move maybe $9. But the market is showing you at 90. We don't like it right there, at least not right now. However, volume's declining on the sell-off. So perhaps the selling is done. It's not my favorite chart, but we got to bounce off the 20-day moving average. The problem is it's already recovered almost 50% of the sell-off from yesterday. And so how much higher do you really think it can go before it gets right back to that resistance area? So it's not my favorite chart or setup, but if you're going to take a shot at it, maybe you just keep a stop right under the 20-day moving average and then take a small loss if this thing starts to reverse and come back down the opposite way. All right. So let's see what the market gives us. It's only 2 minutes left till the market closes. I wouldn't do anything heroic right now as the market's getting ready to close, but I'm already sharing with you. These are the things that I'll be looking at for next week. I'd love to see if Palantir can take out that resistance level. I like Amazon on the pullback. There's a few other stocks we talked about inside the university, but listen, as we wrap this up, plan your trade your plan, and then remember, you never go broke taking a profit. I'll see you on the next one.